Hello, today we will talk about how does payroll work? These are things you need to know as a remote CPA client. So let's get into it. First, you need to pick a payroll provider. If you're an existing client, you've probably already completed this process and there's no reason to revisit it. But for new clients or clients who are looking to change their payroll provider, we're really flexible. We want you to be happy with your payroll provider, but we must have a QuickBooks Online integration. We can't handle manually posting payroll journal entries. We are not going to entertain a process where it involves a download and then an upload to QuickBooks. So in order for us to process payroll on your behalf, your payroll provider must have a QuickBooks integration. Like I said, we are flexible and we want you to be happy with your payroll provider. A lot of these try to entice us with revenue share agreements and whatnot if we push clients to a specific payroll platform, but we decided that we would rather make our clients happy. We can walk through some of the pros and cons of each one. QuickBooks Online Payroll, that's usually the cheapest one, but it's also the most basic. You get what you pay for. Then we have Gusto. It's a little more expensive, but the nice thing is that you pay one monthly price no matter how many times you run payroll. Whereas ADP, they have the most experience globally, but they pay or they charge based on how many payrolls you run. So if you run a payroll and you make a mistake and you need to run another payroll to fix it, you would have to pay an additional fee. And then lastly, we don't have very much experience with paychecks, but we do have a client that uses them successfully and it integrates with QuickBooks. So we don't really have any complaints there. So let's talk about when to set up payroll and when to switch payroll providers. So the best practice is to set up payroll at the beginning of the year. If you're looking to make a switch on payroll providers, the beginning of the year is also the time to do that. If you switch mid-year, you're gonna run into a headache. A lot of the payroll providers will tell you, oh, sure, you can change it anytime, we can get started tomorrow. But it turns into a really tedious task because you have to pull all of your year-to-date payroll reports from your current payroll provider. You have to give them to your new payroll provider, and you have to trust that the new payroll provider will enter them correctly and file your Form 941s correctly. And you also have to communicate to the old payroll provider that they're fired, because we've had instances where we have both the new and the old working simultaneously. The old one is paying taxes, then the new one comes in and also pays taxes, and before you know it, taxes are double paid and you're spending the next 24 months of your life trying to get your money back from the IRS. So don't do that. The other really important piece of information is that we must only use one payroll service at a time. So you should not be using QuickBooks Payroll, and then thinking, oh, you know what, I think I'm eventually going to switch payroll providers. I'm hiring a new employee, so I'm just going to put that new employee into the new payroll service and I'll keep using the old payroll service for the employees who are already set up. Don't do that. No, that's a train wreck. They're going to be filing forms that override one another. The IRS is going to be confused because they're going to get duplicate forms with different numbers. So only use one payroll service at a time, and preferably it would be consistent through the whole year. Otherwise, once you start getting into a situation where you need to file amendments, you just hit the tip of the iceberg. It could take years to clean up. So just being fully transparent there. So every employee has a unique tax jurisdiction that has to be set up in your payroll service. So if you have employees in multiple states, then you'll need to register with each state. This often takes time and it has to be done by you. It can't be done by Remote CPA because you're the person in charge of your business. And so that we always tell people to plan for 10 days to onboard all new employees. So ideally, when you communicate an offer letter to someone, you give us all of the details, you give them their payroll setup form that they fill out with all their routing and account numbers and their address and everything. And then we allow 10 days to get them set up so that if there's any issues with the direct deposit account numbers that they gave us, or if we do have to get a new tax jurisdiction set up, we have plenty of time to troubleshoot those issues as they come up. Some payroll processors are strict about proving that you have the cash to make payroll, so they require an extensive bank validation. That can also take time to set up if you are a brand new account with them. So back in the day, the scam was someone would create a fake business. Maybe they would even file for an EIN. They would reach out to ADP. They would want to get all set up for payroll. They would provide a routing and account number, and they would process payroll at 4 p.m. on a Thursday to be paid to employees by direct deposit on Friday. And ADP would front the funds to the employees on Friday around 4 a.m. They would deposit their direct deposit into the employee paycheck. In the case of the fraud, maybe it was somebody's friend or maybe it was even themselves. They would get the direct deposit, and then when ADP would go to try to pull the funds from the company bank account, they would be gone, or the bank account doesn't exist. So that's why these payroll providers have a strict validation process to make sure that you have the means to actually make your payroll. And within the payroll service provider, online, all of the element codes need to be mapped to QuickBooks accounts. And every time you add a new employee, if they do come along with a new tax jurisdiction or a garnishment or anything like that, anything that's new, it will have to be mapped before we can successfully post it from QuickBooks. So that's what's involved in the phase of getting set up. Now we have just some overall common advice, things to watch out for. Do not pay employees outside of payroll ever. This includes retrospective pay adjustments, bonuses. Paychecks are way too difficult for you to calculate on your own. And this is another thing that's probably going to trail on for months if you do it, trying to communicate how much was paid and get caught up on tax withholding. If there are garnishments in play, you might be violating a law by giving money directly to employees, because there might be an agreement that a certain percentage of someone's paycheck is to go immediately to child support or maybe a lawsuit judgment against them. So if you're ever tempted to pay employees outside of payroll, just don't do it. And this includes gift cards and other non-cash benefits. It's really best if these go through payroll. The best pay frequency we've decided is bi-monthly, usually the 15th and the last day of the month. This makes your budgeting a lot more accurate because you won't have 2 months that have 3 payrolls. So if you do bi-weekly, most people do every other Friday, every year you will have 2 months that have 3 payrolls, and those months will fluctuate from year to year. Sometimes it might be March, April, September, or October. And then when you're looking at your financial statements, you'll wonder, why was payroll so much more in September? Well, it's because there were 3 pay runs. And so if you just keep it to twice a month, your payroll expense should be pretty consistent through the whole year. The other thing that we found is most of our clients have a more predictable cash cycle this way. A lot of people get their revenue around the beginning or the middle of the month, so this ensures that the cash is there to process payroll. And if you do choose a payroll provider like ADP that charges every time you run payroll, you're going to have an overall lower processing cost if you're only processing 24 payrolls per year as opposed to 26. And then the other thing is, for those of you who are on accrual-based accounting, technically, if there's a lag between the pay period end date and the time that you actually pay employees, you might be subject to a year-end accrual. So that would be, for example, if you have a pay period that ends around December 27th, but employees don't get their paychecks for that until January 5th. As of December 31st, we would have to evaluate, are we going to accrue for 4 or 5 days of wages that haven't yet been paid out? For your benefit, having that extra accrual deduction will help you from an income tax standpoint because you'll have an additional deduction, but there's a lot of extra time and energy that goes into that accrual. So it might be better if you can just arrange payroll to run on the 15th and the last day of the month and be paid in real time. So if all employees are on salary and they have a predictable annual amount that they earn, you can run that last payroll on December 30th or December 31st. It will pay out wages right up through the end of the year, and you know that your deductions are maximized and you don't have to go through the headache of making an accrual. Moving on. So let's talk about the difference between employee and employer taxes. There's a lot of confusion around this. So 6.2% of all wages get withheld from an employee paycheck to cover Social Security, and 1.45% also gets withheld from employee paychecks to cover Medicare. And then on the company side, you have those exact same taxes. So you have to incur an additional 6.2% plus 1.45% of payroll tax expense. So it gets really confusing. A lot of people don't understand that the employee pays half and the employer pays half. And then they will see these entries in their bank feed where it says ADP tax and it has a dollar amount, and then it has ADP wages, and people see that in their bank account and they're like, great, I can classify all of ADP tax. That must be payroll tax expense. Nope, that ADP tax amount includes both the employee and employer portion, and you're not allowed to take a deduction for that employee portion. Your deduction is the wages that you paid the employee. That's your full deduction, and then the amount of tax that's withheld from that employee's check is attributable to the employee. So you still get the deduction, you just need to classify usually half of that as wage expense instead of payroll tax. So this is why we need an integration with QuickBooks Online, because when we set up these mappings from the payroll service to QuickBooks, it will automatically create a journal entry that will post everything to the right buckets. And then when you see these transactions come through in the bank feed, you should have a match for ADP wages, and then you should enter ADP tax as either an expense or a transfer from your payroll liability account. And then we'll talk about it in a minute. The payroll liability account needs to reconcile to zero at the end of the month, and that's how we know that we've done payroll correctly. That's the difference between employee and employer payroll taxes. So let's talk about bonuses. This is always a hot topic at the end of the year. Bonuses need to go through the payroll system just like any other paycheck. They can go through in a normal pay or a special run payroll. Tax withholdings on bonuses will be higher just because the tax tables assume that the employee will earn the same rate for all pay periods in the year. You can gross up someone's bonus to help the employee with their taxes if you want. There's other deductions that need to be processed on bonuses. So if you have a 401k plan set up, oftentimes the employee will want that portion of that to go into their retirement. And if they don't, we can turn it off just for a special bonus run. But bonuses need to show up on an employee's W-2, unfortunately. It is taxable just like any other income is. So it's really best if these are processed through the payroll system. And we see a lot of people giving gift cards as bonuses. And if you do that, technically we need to make an entry in the payroll system to make sure that this is accounted for on someone's W-2. And that gets really tricky because the next time the payroll goes to run, it's going to try to withhold taxes based on that gift card amount. So then someone is going to think that they've been shortchanged on their paycheck because their net pay will be lower because it's going to pull out taxes that were not accounted for when you gave someone that gift card. And other benefits that the employee receives are technically taxable. So this includes things like gifts and healthcare stipends. So preferably any compensation and really even reimbursements are best processed through the payroll system for W-2 employees. Let's talk about funny things about tax withholding. So the Tax Cuts and Jobs Act from a few years ago lowered the withholding requirements for many employees in an effort to stimulate the economy. What does this mean? Employees are getting more in their take-home pay and less tax withholdings. So at the end of the year, they could be in a situation where they have a tax balance due because their withholding wasn't higher. So we're seeing more and more employees filling out an additional revised W-4 to increase the amount of withholding. It might be based on a percentage or a dollar amount, but we have to accommodate that. That is a required thing that we must do when someone submits a new W-4. And it is possible that low-wage employees might not have any federal withholding. And that's just the nature of the tax tables. And if these people have more than one job, they could be in a situation where they also have a tax balance due at the end of the year. So we just want to be really cautious because we don't want to see anyone have a surprise tax bill. Let's talk about the remote CPA responsibilities and what we will do for you as your payroll liaison. If you're engaged in a remote CPA package that includes payroll processing, it just means that we will relay all of the payroll data. This can be timesheets, employee files, and set up to the payroll provider. The payroll provider will process the payroll. They'll distribute the direct deposits to the employee and file all of the filings automatically on time. And they will suck the cash out of your bank account in order to pay all of the payroll taxes, both the employee and the employer share. So we realized long ago there is no feasible way for remote CPA to run payroll. There's no way for us to do it any cheaper than the payroll providers that already exist. They have a presence nationwide. They're familiar with all of the different tax jurisdictions. They have ways to get set up really quickly. And if we were to sit down and try to file things on paper, not only is it a huge liability for us if we do it wrong, but we're just not equipped. And despite the cost of payroll processing, it's still actually pretty low. It's a very thin margin because these companies have so much volume, and there's a ton of infrastructure to get this set up. But payroll providers can be difficult to communicate with, which is why we bridge the gap. So oftentimes the payroll provider doesn't want to be on the hook for something. So they will tell you, hey, we're waiting for your state tax ID number. And you might not know how to get that. You might not know how to get registered, and they might send you some instructions that turn out to be wrong. So we bridge that gap, and on an ongoing basis, we will collect all the timesheets. If there's expense reimbursements, we can process those. And we're the lipstick on the pig so that it makes it a lot more user-friendly for you. And the provider outside of Remote CPA is the one that will handle all the filings, all amended things. So if there's an error on the 941 for whatever reason, the payroll provider will handle that, and the employee retention credit is above and beyond our scope of payroll. Let's talk about payroll reconciliation. So we have lots of clients who have struggled with this, where maybe there's a new element code, it's not mapped correctly, or it's not defined correctly, and then we have a running balance in the payroll liability account. So that means that we get to the end of the month and the payroll liability account is not zero. Maybe it's just a few $100s, positive or negative, but it really needs to be zero so that we know that it's correct. This means that all of the payroll journal entries were posted from the payroll software. They were posted correctly. And then all of the tax and wages were paid out of that account in their different distribution, because like I said, most payroll providers group all taxes together, both employee and employer. If we know that they all wash out correctly, it will result to zero at the end of the month. And if the payroll service is posting the journal entries correctly, we should have matches in the bank feed. That gives us more comfort knowing payroll will be correct at the end of the month. And then tax transactions often recorded from the bank feed to the payroll liability account. That also helps us verify that the reconciliation comes to zero. And the other thing to note is that Remote CPA uses a standard chart of accounts for payroll across all of our clients. This is just to maintain consistency and make sure that we are compliant from all taxes, payroll taxes, and income taxes. So please consult with us before adding or removing or remapping any payroll accounts. What to do if payroll is wrong? So it will happen eventually, especially if you have employees who are paid hourly. Please let us know the mistake right away. Doesn't matter whose fault it is. We just want to get it fixed. And if we don't understand what you say in your email, there's a higher probability that we will make a mistake. So please don't assume that we know everything or we know what you're talking about. If employees were underpaid, do not process a fix on your own. Do not issue any additional checks outside of payroll to employees ever. If it is urgent that the employee gets their funds, like if it's payday and they were mistakenly skipped, please send us an email right away and we will make every effort to fix it on that day, just knowing that you might incur an additional fee for payroll processing if your payroll provider charges per payroll. I cannot reiterate, please do not issue checks to employees outside of payroll. In the event that employees were overpaid, you have a decision to make. You have to decide if you're going to ask the employee to write you a check or deduct the amount from a future paycheck or just gift the amount to the employee. We've seen all of these scenarios and there's no right or wrong answer. It's just whatever you decide. And we will gladly facilitate a special pay run to fix it. Or if it's not a high dollar amount, we can always do a retrospective pay adjustment the next time payroll runs in order to minimize those processing fees. But let's just make sure everyone understands what happened before we try to go and fix something. So next up, and that's it. So if you have any questions about payroll, what is our responsibility, please ask so that we can get it cleared up on the front end, because we don't want anyone's check to be wrong. Thanks. Have a great day.